It's time for Suttie Mortgage Show, episode number 7. What is up, everyone? Jason Suttie here with Suttie Mortgage, and back to you with episode number 7 of the Suttie Mortgage Show. Pretty pumped that we've actually got going. 7, we've set 2 months in a row, and it's always interesting that we're doing this in such a crazy time in the mortgage market. So pumped that we're here for you. Let's dive right in. And the first thing we always talk about, what did we learn this week? And what we've really kind of tuned into a lot is a lot of us are self-isolating and self-quarantining, and for many self-employed people, that means honestly sitting at a desk all day long, and that's not normal. I know myself, I'm usually out meeting with people, having lunch and all that stuff, and that's kind of gone. So what I've been really doing a lot this week is making sure to connect with people, whether that's on the phone, with Zoom, FaceTime, really reaching out and keeping those connections with people alive, and it's really helped. I've really enjoyed it, and it's kept me in a great mindset. So I think if you're at home working and it's something new for you, don't forget to reach out, have conversations with clients and colleagues, anybody that you can think of. Great time for that. Don't lose that connection and keep the positive mindset. Let's give you a little bit of a market analysis. What's going on right now in the market? This week, we've steadied off a little bit. So we've kind of done the up and downs kind of over. The big things we're seeing is, number one, on the variable side. Yes, we've seen the prime rate drop all the way to 2.45. But what we've seen them take away now is the discounts off the prime. So you're used to be seeing like prime minus 0.2, prime minus 0.5. Don't see that anymore. Now you're seeing a little bit of at prime or even higher. I would say the average variable rate is about 2.6 right now. On the fixed side, we saw that dip a couple weeks ago and it come back up. That hasn't changed. So I would say the average 5-year fix is around 3.1. So 2.6 on the variable, 3.1 on the fixed. Now, the one interesting thing I talked about in a video the other day that we are seeing a lot of, and everyone needs to be cautious of, is lenders and how they're verifying income these days. It's probably one of the biggest changes we've seen. What the lenders are now doing, a lot of them are actually calling the employer twice. They call the employer at the beginning of the file, hopefully before you've removed your subjects, and they're saying, yep, Mr. Smith is working here. But the one thing they're doing now that they didn't do a lot in the past is they might call the employer again before closing and making sure that the client still works there. The reality is the likelihood of people getting laid off has never been greater. So they want to ensure that whoever they're doing the deal for, nothing's changed and they still have that income. I think the caution, I guess, I put to anyone that's not super essential in their role at work is to make sure, if you're going to buy a home, that you're having that heart-to-heart with your employer, getting a feel like what's the likelihood that you may or may not get laid off. If you're essential, police, fire, things like that, obviously you're good. But if you're not, let's make sure, and with any degree of certainty, if it's okay, move forward. But if there's something that's a 50-50, you might want to hold off before making that move. So really important when you're buying a home to really think about the actual security of your employment, because it could come up to haunt you if you get laid off before you close on your mortgage. So next piece we like to talk about is we want to do the question of the week. And the question of the week is, what kind of documentation do I need for my down payment? Great question. A little confusing sometimes because people feel that, we're asking for bank statements and all these things and why it's so intrusive. But the reality is for a variety of reasons, banks are really trying to avoid fraud and money laundering. Real estate in the past has been a way to launder a great sum of money because of the purchase prices. So they're always trying to look at where did your money come from? So let's talk about 3 real common types of down payment. Number 1 is you're selling one place and moving to the next. And that's pretty straightforward. You get a sale agreement and your current mortgage statement, figure out what you're going to sell for, minus off the variety of costs, and there's your down payment. The one key about that being your down payment is the lender's going to want a firm sale agreement, subjects removed, not just listed, not an offer that has removed subjects. The subject's got to be gone, so it's a firm offer. So that's number 1. Number two, which is a little bit more common these days, and that's a gift. First and foremost, they want it from a relatively close family member, a mom, dad, sister, brother, grandma and grandpa, okay, but they don't want it to go too far out of the wheelhouse there. And what each lender does is they have a gift letter, so don't make your own up, get it from the lender, and then they're gonna wanna see the deposit of that sum of money into the client's bank account, ideally at once. So if mom and dad are giving you 100 grand, they're gonna wanna see a gift letter and then 100 grand hit your bank account so they know you have it. There are a couple lenders that actually want to confirm the source of the down payment further. I want to see mom and dad's bank account, but that's not as frequent. So just the two things, the bank statement and the gift letter are the more common pieces for that. Finally, just your cash or your savings. And what lenders are looking there is for a 90-day history. And what they have in the back of their mind is a reasonability of the accumulation of the funds. So meaning, if you're someone that maybe makes $200,000 or $300,000 a year, you could acquire cash quite quickly, and that seems reasonable. Whereas you're at maybe at the $50,000 a year job, it takes you a little longer. So they want some reasonability as how you could have come up with this money. And so they get the 90 days of bank statements, and they just don't want to see any massive deposits. If you've held on to it for a couple of years, well, great, that's easy. But if you have some larger deposits, why are they there? Maybe that's just how much money you make. So just really the importance is the explanation and the consistency in that down payment. So to recap the three common types, you got a sale, a current property, you got a gift, and then you got your own savings. If you have any questions about down payment or anything else, we'd love to help you out. Jason Suttie with Suttie Mortgage, your story starts here.